This is our Forex blog for February 14th, 2012. And like we do most days, we buy the strongest ones versus the weak and sell the weakest ones versus the strong. We statistically compare each currency to every other one using multiple different statistical tools, which we average together and to give you a histogram reading. And underneath that, we have the daily trend, weekly trend, and monthly trend, which is also averaged together with three different tools on each time frame to give you a more smooth and accurate value. So obviously between the dollar and the yen, the dollar is strong and the daily and weekly is up, and the yen is weak on pretty much all time frames. So you could have bought the dollar yen, or you could have found another currency that's stronger on longer time frame charts, so weekly and monthly, like the New Zealand. Unfortunately, the Australian is strong today. You could have focused on buying the New Zealand yen for most of the day. Here's take a look at this. You can see obviously it shot up. This is the hourly moving average we use as a filter. When price is above there, it tends to go up. When price is underneath the hourly, it tends to go down, finds resistance. You can see last night it fell about 40 pips, 40 or 50 pips when it broke the hourly. And that's oftentimes what happens. The upper containment bands, when price is above there, it tends to reverse. Normally, if you draw your fibs on the last wave from here to here, you notice it hit it to the fib target exactly. Because it's so far above the upper containment band, this is a very high probability place to look for a short, and it pulls back 40 pips. You can trade with the trend, but when the trend moves statistically too far, it becomes higher probability to go against that trend, especially when it lines up with one of our trading zones, which we feel are very high probability, maximum high or low of the day, and especially when they're above or outside the containment band, it's even more so. Later today, the pound shifted back into the direction of the daily, weekly, monthly, which is down, especially at 7. These two currencies were both really not that strong at that point, but coming up to 8, the dollar got really strong. And at around 8 o'clock, you could be selling the pound dollar. Here's 8 o'clock, and guess what? It just broke from above to below the hourly moving average, and that's oftentimes where trends begin. This is our Fibonacci retracement level and Fibonacci profit target level. Sometimes they happen to be at the same area off of multiple time frame charts. This was a very high probability low earlier in the day, and as you can see, the second fib area, which is right here, was the low the next time. And a lot of times these line up with the Fibonacci profit targets of the last wave. You can see this is right near the 1.382 of this wave, and it was a bigger wave last night when I did the analysis that I thought this was going to be the maximum low, and it was. This is very strong support as well, which it held twice for about an hour and a half this time, and then it made it down to the next level. So when you short, for example right here, this is a very high probability profit target level, and because you have a fib retracement level, Fibonacci profit target level, and a Fibonacci profit target level intraday, you can get into a quick little scalp right here and make 15 to 25 pips. 15 to 20 pips, I'm sorry. The CAD, pretty much strong today. This is one of those that you might not want to bet too big of lot sizes on. If the weekly, monthly trend are down, the real-time trend trumps everything, but you prefer to have a currency that's strong on all time frames. So the CAD is strong for most of the day, and you can trade that against the weak the weak pound, or also the very weak yen. Let's take a look at the CAD yen. You want to be buying the CAD yen, and you notice this just keeps going up. The statistical strength is just showing incredible strength, and on pullback or sideways moves, there's just 1/3 to 1/2 the momentum to the downside. And that's very high probability continuation pattern. When you see it go up with incredible strength, pull back with no weakness, it's a no-brainer. The trade is one of the highest probability trades I've ever seen in the last about 12 and a half years that I've traded. When you see statistical strength on the way up, followed by pullback with almost no weakness. In other markets I've traded stocks and futures, we're not comparing all the other stocks to each other. Because the CAD trades against the yen and every other currency, we can statistically compare it and get this kind of benefit for our trading that you can't find in other markets. That's why I like the Forex market so much myself. But you know, when you buy these little pullbacks like this, you want to draw your fibs on this, and these fib targets are excellent places to get out of the trade. I wouldn't have bought this little pullback here because most of the time the 1.618 is the end of the move. But once it made a little two-wave pullback right here, you can see it went right down to the 1.618 fib target. This is our Elliott two-wave system in perfection. You buy right there, and typically it's going to go to the next fib target of the last wave, which is from here to, actually, let me take that back. I would draw from here to here because most of the time it's not going to go too far above the upper containment band. So you'll be long somewhere around 06. Here's your profit target at 43, and you can see it went right to the 1.618 installed. It also happened to be the 50 number, and it was our second trading zone where it's a statistically high probability reversal area. Again, another trade you could have taken is selling the weak pound versus a strong CAD too. This is not a currency I typically leave running overnight, so we'll put it up on the chart here, and you can see again it's been falling all day. Let's add the FX Trend Pro to the chart so you can see what it looks like with the momentum moves down. Notice the same exact pattern. Extreme weakness, little sideways, very tiny upwards counter trend move, pretty much sideways rectangle, no strength whatsoever. That's a trend that's very likely to go down, and guess where it went? Probably right to one of the fib targets. Look, right to the fib target. So you'll see that these patterns tend to repeat themselves, and that's why we trade the same tools, methods, and systems day after day.